Bring in an Uber investor in the meantime to talk about this week's IPO. Mitchell Green, founding partner of Lead Edge Capital. How much do you think this employment issue is going to be an overhang long-term for Uber, for Lyft, for the whole business model?
I think, Andrew, I think very little, to be quite honest. I do think it's important, though, that, look, drivers' views get to be heard. It's obviously a very small minority of the overall driving pool that is not really happy right now, and they have the right to express their opinions as they should. But I just took an Uber down here this morning, and the driver was a mom with 2 kids and who uses the supplemental income to send her kids to camp. And you hear about these stories time after time, and I think it's providing a huge number of part-time people with jobs, and I think they're definitely not employees; they're contractors.
Right. So you've probably read the editorials. There was one in the New York Times last week where there was a suggestion that Uber represented a moral stain on Silicon Valley. that effectively the labor, if you will, is being taken advantage of. You think that's wrong?
I think that's completely wrong. I think that it is. I think it's a market. I think that Uber and Lyft and things like Airbnb are providing people with supplemental income, and I think it's a general net positive for the economy as an overall whole.
Can we just? The futures are up. They just jumped 100 points.
Mitchell was talking.
No. President Trump, I guess the reason for China pullback and attempted renegotiation of the trade deal is a sincere hope, capital HOPE, that they will be able to negotiate with Joe Biden or one of the very weak Democrats and thereby continue to rip off the United States for $500 billion a year for years to come. Guess what? That's not going to happen. China has just informed us that they are now coming to the U.S. to make a deal. We'll see, but I am very happy with over $100 billion a year in tariffs filling U.S. coffers. Great for U.S., not good for China. That's 100 points in the. I wish we could see
$100 million we paid for by.
Okay, let's look at
by American citizens.
I know. There you go, Andrew. Get that in. But can you just look at the stocks, please? And there is what happened in the last 2 minutes. But it's not the Chinese. It's the American taxpayer paying.
The Uber IPO. Just watch this.
All right.
That's what really matters.
Get back to.
Right. Let's get back to Mitchell. Just on this labor issue long term, why don't you think there's going to be a regulatory issue? And maybe not necessarily in the United States, but in other places.
It's all over the place, isn't it?
Yeah, look, in some countries, I think you may, different countries, they're in huge numbers of countries, and in different countries are going to have different regulations. We believe in the United States and other major markets that the vast majority of the drivers are not full-time drivers. They do not, we've talked to many labor attorneys about it, and they believe they should be as contractors. Right. They're not doing a bunch of things. Like there's this company called Firefly that is doing on ads in taxis in New York City, how they have the billboards on top of them. There's this company Firefly doing this in LA and San Francisco with a lot of success. Allowing the drivers to make money by becoming part of Firefly. Uber is not doing it themselves because they do not want to get closer to the drivers and risk any association with this employee versus contracting thing. I think it's super important.
Right. Hey, Mitchell, 2 questions. One is, what round did you get into Uber at? And I ask because we have a couple of viewers who literally just asked themselves about you, in large part because you're in a different position, obviously, than many of them may or may not be if they were to buy in on Friday.
Sure, absolutely. So we invested, I think it was around the Series E. There's been so many rounds of money put into this company. And look, the company has raised a lot more, and we've been diluted a lot more than we thought along the way.
But the valuation was what then?
Well, we paid about, I think it's better to look at per share price. So the $33 a share. So, look, I'm not like Benchmark or Menlo Ventures or some of these, first-round capital or lowercase that are in it, pennies on the dollar.
And then,
so
And then the final question I had before we go is, you saw Lyft's numbers last night, and you were impressed, unimpressed? What was your sense?
Well, the market liked it initially, and now I don't know what they're doing right now because
flat.
The futures obviously popped. It's flat. What do I think? Revenues beat, but obviously it went public like March 31st. The bottom line was slightly better than expected. I think people were negative on a few things. One, there's a material revenue decel coming. That I think goes to like 54% in Q2, going down to like mid-30s by the back half. That's one. Two, they did show nice operating leverage in the quarter, but if you look at their guidance, which was like very specific, by the way, it actually shows they're going to continue to burn more money and they're going to lose some of that operational leverage. Right. And three, I think investors are a little annoyed that they did not provide number of ride guidance and bookings guidance. Now we've seen precedents in the past. Alibaba in the past, gave quarterly GMV guidance. Now they don't. But I don't know. I mean, it's a stock. If it's basically flat, maybe it's a non-event.